Before you go out and invest in CoveredCall ETFs, and before you even know whether this strategy is right for you, it's probably a good idea to actually build out a test portfolio and just see what those results are. Do they align with your goals? Well, in this video, that's exactly what we're going to explore. And to help you guys get clarity and reaffirm whether this strategy is right for you. So what we're going to do first, we're going to go through the whole suite of CoveredCall ETFs here in Canada. I'll introduce you to the main 7 CoveredCall ETF providers here in Canada, and then I'll show you how we can actually go about using an online tool to test a portfolio from funds that you've pulled from one of these 7 managers, or you mix and mash from these 7 CoveredCall ETF providers. So let's get into that. I'll show you guys how to use the tool. I think it's easy enough to use, not frustrating, but certainly has enough choice to pertain to your situation, okay? And quick enough as well. So let's get into that. The first batch of funds that we're looking at here are by CI Financial, which, by the way, I'll link in the description below so you can get to these pages quick, easy. The next batch is by Harvest. If you land over their products, you'll see they have a bunch of CoveredCall ETFs on this side. They also have a bunch of CoveredCalls over here with a leverage component as well. So it just means like it's an enhanced version. Okay, it's using borrowed money to jack up the yield and jack up the potential performance over time. And then they have this kind of one fixed income CoveredCall ETF at the top here. Okay, next up is Evolve. And again, you hover over their product page. Here on the left side, you'll see a whole host of CoveredCall ETFs. And then they have this one here that's another fixed income CoveredCall ETF. Next up is BMO. So here they have, again, a mixed bag of sector funds, global fund, diversified funds in Canada, US, global, Europe. Then after that, we got Hamilton. Hover over their ETFs. We have 4 under yield maximizer ETFs, and then 2 over here, which have leverage on them as well. Okay, so again, hover over the products page, go to active, you head down their CoveredCall list, and everything here on the left-hand side are all CoveredCalls, but they also have 2 kind of hiding off to the side over here. And to round out the 7 is Brompton. If you actually head over to their main page here, go over products, ETFs, and the top batch of ETFs are all CoveredCall ETFs under equity, income, and growth. Okay, so now that I've introduced you to the fund managers, and I know that it's quickly hovering over some of the actual funds, again, you can explore that for yourselves. Let's actually get into Portfolio Visualizer to actually put some of these funds together to see what you all are up against as far as performance, price return, total return. We'll get into that. So Google search Portfolio Visualizer. Now there are different ones that will pop up, Portfolio Visualizer, but we want to make sure it's from portfoliovisualizer.com. So we'll click on that. They got a whole host of tools in here, but we want to end up on the backtesting portfolio section. Click on backtest portfolio. Now, you can test out many years. I mean, for all I know, you guys are going to do this with different ETFs, different stocks, but because CoveredCall ETFs are more of a recent phenomenon, some have been around for a while. Some of the fund managers like Horizons and CI and Harvest have had certain funds around some have been around for 10 years, some have been around for 5 years, but we're really not going all that much further back than, say, 2010. But the bulk of I would say the new ones have been in the last 3 years. The vast, potentially, I don't know, Off the top of my head, maybe 40-50% in the last couple of years. Okay, so let's go through this, and then I'll give you guys 2 test portfolios that I just kind of whipped up. But anyway, if you want to test 2023, there is a month-to-month section. I initially went to this, but I think it's actually better just to go year to year. Go scroll down to 2023, include year to date. We'll just stick with 10,000. It's just an easy number. Cash flow, again, if maybe you're retired, or not even so much, well, if you're retired, there's a withdrawal section. And then obviously if you're contributing, then you can certainly add that into your choice here. Rebalancing, if you really want. I typically say no, like I'll kind of just ride out whatever amount I've put in. Certainly you can add in leverage maybe if you really want. Reinvest dividends, no, yes. And then everything else is kind of like, you can also add in a benchmark. You can maybe a specific ticker. Anyway, we'll get into that. And then what you want to do is just kind of add in the tickers themselves, and then highlight, maybe add in 25%. You could do ZWU. I don't know. I'm just putting in random ones here. Okay, 25%. Let's do TFSA. We'll go down to that. That's a Brompton fund. Okay. Again, we'll do maybe 25%, and I don't know. Let's just do HDIV. And we'll do 25%, all random funds, and then we can analyze the portfolio. Let's see how this random portfolio actually did. Year-to-date performance, starting at the beginning of the year, we ended up with, we went from $10,000 up until $10,676. And that is till the end of October. November's performance hasn't been factored into Portfolio Visualizer just yet. So there is a bit of a lag. And also too, some of these funds don't actually work out very well. So for instance, you can't put in BKCL because that's a newer fund. It's got to be around for at least a year if you want it to actually back test it. And then certain funds will kind of randomly just not work, which I get it. It's not great. We want to be able to test all of our options here, especially with cover call funds. But again, this is kind of the best we're getting with a free tool that's kind of more of which is a more of a known tool to help investors out. So let's go over to the other portfolios that I ended up whipping up. So this one is a really fun one because it's just pure technology. Okay, so a pure technology fund, as it turns out, have actually done really well in 2023. So let's check that out. So let's reinvest all the dividends, no rebalancing whatsoever. What do we get? So I added in HTA by Harvest, ZWT by BMO, TXF by CI, and TLF by Brompton. And if we run the numbers, with the $10,000 investment at the start of the year would have turned into $13,620, which is just awesome growth, especially for cover call funds, which get this reputation of they'll never grow and they'll just wither away into oblivion, mainly because you're trading off future growth for basically yield right now. Cash in your pocket now is probably the best way, easiest way to think about it. Yield generated every month in the form of income paid to you into your pocket, whether you reinvest it or just keep it for yourself, which handicaps it. It's meant to put a cap on your growth. But anyway, let's go over into annual returns and see what we got over there. So we got an average return of about 36%. Right here we can see all the funds have done just bonanza this year. So average return, total return of 36%. So what do we get if we say take away reinvesting dividends? So let's analyze that. Take it away, and this is what we get. $10,000 on just a price performance level would have turned into $12,858, 28%. But again, if we go over to the annual returns, We can see that the total return is 36.15%. Again, price-wise, we're looking at just a return of, call it 28% or so. Okay, so the next portfolio I thought it would be maybe kind of interesting to show you guys, which is kind of more of a balance, but I don't want to get crazy with the number of funds. So again, we go year to year. We're just looking at 2023. We'll include maybe a benchmark into this one as well. So no rebalancing, and let's actually reinvest, and then we'll test it without just afterwards. So I chose a bunch of all-in-one funds. These are ETFs, again, that invest in ETFs. BMAX more kind of they definitely have a lot more global exposure. HYLD is more US focused, HDIV more Canadian focused, and HDIF more North American focused. And then HTA, of course, is tech. And when I put a much bigger weighting, so we got 60% in the all-in-ones and 40% in the tech sector, using the tech sector as a growth vehicle, as it has shown that this year that it kind of bucks the trend of what is typically expected out of CoveredCall ETFs. We can see that if we don't reinvest the dividends. Okay, so this orange line is just a Vanguard 500 index investor. Okay, so this is someone who maybe more focused on S&P 500. Maybe there's some other funds in there that they are, but kind of more, I guess, passive in nature. No cover calls whatsoever on that portfolio. So on just price alone, without reinvesting the dividends, this portfolio does trail behind the index investor. But if we again, we switch on reinvesting dividends and we compare it to that Vanguard 500 index investor, we'll click Analyze. And as it turns out, when we reinvest, we actually, year to date, we actually beat out the index investor. Okay. And let's check out our returns here. So the CoveredCall portfolio, the more balanced with the buoy being tech, does outperform the index investor. Head over to annual returns, and just more of the same. Even though, let's see, what do we got here? Even though you can see massive growth with HTA at 30%, and all these other funds have kind of hovered around, zero, a little bit of growth from HYLD, but not taking into consideration total return. Okay, so with that being said, everyone, hope you all enjoyed this video, this little breakdown. Hopefully informative enough. Hope you all go out and actually try Portfolio Visualizer for yourselves. And by all means, again, click all the buttons of the like and subscribe variety, and I'll see you all in the next video.